Hey, good morning, folks, and welcome to Swing Trading Today. I'm getting started here a little bit late this morning, so I apologize. So I'm going to jump right into it. I'm just looking over the news items on Benzinga, CNBC, and Zero Hedge. And the primary theme of the news this morning is that, again, you had the Chinese come out, try to talk up the trade talks. Uh, they're trying to promote a deal. Whether or not we'll get one, who knows? But they had another big bank go down over in China. Well, they needed a bailout, something like that. But the Chinese banks are in a lot of trouble, and of course, Hong Kong is still on the front burner. So the Chinese are feeling pressure. There's no doubt about it. And the headlines continue to prove that. You have it on Benzinga and also on CNBC. China's top trade negotiator, Liu, Liu, I used to know how to say this, Liu Hui, talks to Lighthizer, Munchin about resolving their core issues. So they keep talking. They keep talking. Feel good about your day because our politicians and the Chinese keep talking. All right, so we have Powell out. Powell says, remember, he spoke last night at about 7 p.m., and he said that, good morning, John. He said that, let's open this up. I'm just seeing this right now. Here's some bullet points. Fed Chair Powell said Monday the central bank is strongly committed to maintaining 2% inflation. He didn't say on average, I guess, because that's what he means. The remarks are a further indication that the Federal Central Bank is unlikely to raise rates anytime soon. Good for stocks. Powell also drew attention to low labor force participation and middling wage gains. Well, he has him to blame for that. The greatest transfer of wealth in our history. So it's not entirely on him, but it's certainly a portion on him. He doesn't exercise his independence, so I'm not sure what he means by that. Unless, of course, he's insisting or making a comment with regard to the way that he needs to monetize debt because the federal government keeps spending without any cash in the bank. So because he's an enabler, he's playing it passive aggressively, blaming the Congress. All he needs to do is say, I can't do it anymore. And let them make their own decision about whether or not they want to continue deficit spending without a bank to back them up. So go figure. I'm not going to spend too much time on these comments. They mean really nothing. I've been saying this for a while now. Don't listen to what they say. Look at what they do. And you had yields drop down again this week. Let's see what they're doing this morning. And in fact, on that, let's segue over and into the pre-market activity. And we'll begin with the dollar. The dollar remains strong this morning. And we're consolidating nicely here. No pressure on the dollar. We broke out here. Actually, we broke out here on the 22nd. We've been consolidating, and now it appears as though we are getting ready to break out. Now, we do have a lot of economic data coming out tomorrow. We have GDP numbers. And a number of other market-moving data points which can influence the dollar. Let's take a look at gold. Gold took it on the chin yesterday, that's for sure. We gapped up overnight. And we pulled back, and we just finally went positive again a short while ago. But given the strength of the U.S. dollar and the lack of geopolitical tension out there at current anyway, it's not on the headline, If you want to allude to Iran and their problems and how they're blaming us, yeah, what are they going to do? They're not going to attack us, at least not now anyway, until they feel backed into a corner. So gold is looking good. Good morning, RL. Happy Thanksgiving to you, John, RL, everybody. Starting to get to that holiday feeling. All right, so gold, it's bouncing. We remain in the trading range. Not much to do here. I wouldn't go buying it at current. I am looking for physical silver, though. I'm probably going to be buying some physical silver to take delivery of. I've decided I will take delivery of it and put it in a safe deposit box. Let's go to, and speaking of silver, let's go to silver. Same to you, John. Silver this morning is breaking out. Looky there. So silver, it didn't have as negative a day as gold did yesterday. And today, it is beginning to move up higher. But we don't want to get excited by the pre-market activity. I want to take a look at how we close. I mean, after all, on a daily basis yesterday, we did flash a bearish key reversal on the day. So, obviously, we're using 4-hour charts at current. And the daily chart takes precedence over a 4-hour chart. So, we want to defer to the closing price on a daily basis to identify whether or not we have negated yesterday's price action, or do we fade today and put in lower lows? We don't know yet. We're not that smart. We're going to let the markets tell us, and we'll do as the market directs us to. So in the pre-market anyway, silver is looking good, better than gold. And I mean that on a technical basis. Gold is kind of in a no man's land where silver is beginning to pierce resistance levels. Let's take a look at the 10-year bond. It shot up higher last night, man. Very, very overbought on a 4-hour basis, but wow, this is a big move higher for the 10-year. We haven't been up here since October the 11th. And we'll probably see a pullback on the 10-year, given this overbought condition. But wow, a very, very nice move this morning. That means that yields are dropping. And that should help silver and gold. What would help more is if the dollar broke. But, when you see Powell come out and for the most part allude that there's not going to be any interest rate hikes. So it's going to be cheap money floating all over the world. They're going to continue to print dollars. And you see the dollars still hold support. You got to ask yourself the question simply, what is wrong with the Eurozone? How bad is it? Same deal goes for the Japanese yen. I mean, I was looking at a chart the other night, as a matter of fact, of the Japanese stock market, the Nikkei, and it's looking not bad. We're building a massive right side. I'm probably going to do a video on this. A massive right side of a base on a quarterly basis. That's how far back you really need to go. I mean, a very high level view of the Nikkei. And as a matter of fact, here we go. The Nikkei. And I'll go to the yen thereafter. I don't think we have a quarterly chart on this. At best, we have a weekly chart. Not going to show us much from that high level view. But it's showing us enough here, right? We have a nice trend higher on a weekly basis. And I think that the Japanese market is the forgotten market. I mean, they've been mired in what we're about to go into, or what we have been in, for so many years. And people, I mean, you have international funds, global funds that have ex-Japan, right? So they're in everything ex-Japan. So now all of a sudden, you're seeing life out of the Japanese stock market. And I'm going to be looking for signs of life here in the coming weeks and weeks. I mean, don't go chasing the Japanese stock market at current. There's no reason to. But it's an area where it's a great contrarian trade. And I'm going to probably do a separate video on this and go over the monthly, quarterly charts. And we will identify what our resistance levels are and what would be some really good risk-reward entry points over the course of the next year or so. So the Japanese markets are looking pretty good. Pretty good. And not as overbought as the United States markets. Valuation-wise, I'm not sure. That's more analysis I need to do. So it could be far more expensive than for all I know. I don't know. So I need to do more analysis. All right, let's take a look at the yen. This is a weekly chart of the yen. And not bad. I mean, it's not great. It's not good. But you could tell by this chart that the weakness is certainly over in the Eurozone, because the reason why I talk about the yen and the euro is that these are the two major currencies. Forget about the yuan. It's not even a real currency, for Christ's sakes. The yen and the euro are the two major currencies in the Dixie, the basket of currencies that the U.S. dollar trades against. And by far, the euro is a far more dominant currency because it makes up 55% of the Dixie relative to the U.S. dollar, and the yen obviously taking up a lesser amount. But on a weekly chart, what you're seeing here is the yen firming up. All right, we had a nice run through to August. We've been in a consolidation. I think the yen is setting up for a rally here. So I think that you're probably going to see currency traders into the back half of the year and into the beginning of 2020 begin to accumulate the yen, especially as it breaks out versus the U.S. dollar. Let's take a look at the euro, just out of curiosity, because, you know, if you're looking for that contrarian trade, it's going to be short the market. It's going to be silver, gold. And I'm not saying short the market. I'm not even saying buy silver and gold right now. And I'm long of the gold miners. I'm long of silver. I'm not saying to do it. The risk reward is not in your favor right now. Wrong chart. Now here is the euro. Sloshing around, directionless. You know, you want to argue that, here, let's clean this up here. Let's get all these lines off. It's driving me crazy. If you want to argue that we're building a base, okay. And if you want to argue that we may just may be putting in higher lows here versus the dollar, okay. But these observations mean absolutely nothing until such time as we break out against the U.S. dollar. And this is a weekly chart. We're in the middle of a trading range. You can't do really anything here with the euro until we get a continuation pullback and a retest of support, or until such time as we break out above this upper band of resistance. Then the dollar is in trouble. But at current, we're at support. We're in the middle of a trading range. Nothing to do here. And this is what's keeping a bid under the dollar, the fact that the euro is just blah. And you have the Brexit issue, which is going to be resurrected yet again in December. You have the elections in Great Britain. And Lord knows what's going to happen there. In all probability, you're going to get a Tory victory, which means that you'll probably get a move towards Brexit yet again. What will they do to stop it? The Remainers, I don't know, but there's some dirty, double-handed sons of guns over there, and they'll want to keep the Brits in the Eurozone. So Lord knows what's going to happen over there. It's going to be really interesting to watch. All right, let's move on. Stock market futures. I'm getting long in the tooth here. Long in the tooth, right? I got to bed so late last night, and I woke up late this morning, which I never do, and I am just waking up right now. All right, this is a weekly chart of the Russell. We covered our shorts on the Russell on Friday, and thank God that we did, because yesterday was just a face-ripping experience for shorts, and we're pulling back here. This is a 4-hour chart, and this is a fairly strong chart. I mean, if by 9 o'clock we don't break down to new lower lows on the trading session, in all probability we are going to continue higher on the small caps, and we'll be looking to buy the small caps. Volume yesterday was very good, so what's not to like here? I mean, on a daily basis, a bit overbought. On a 4-hour basis, a bit overbought. You know, I'm not going to get heavily long here, but the market's sending you a signal. And I mentioned this over the weekend or on Sunday Night Futures Live. You can't short this market, despite all of the reasons why that are out there. The macroeconomics of the global economy, the domestic economy, all looking weak and getting weaker. You can't fight this market. You have the Federal Reserve that's just printing money. Can't do it. There will be a time, though, and we'll be there. You'll know when it's time. Let's move on to the S&P 500. Again, we're down this morning. What's not to like here? We pierced the upper band of resistance on a 4-hour basis. We're pulling back. And what we're looking for is simple. We're looking for support to hold, and we're looking for a breakout. Now, we're trading above the upper band of resistance on a 4-hour basis right now. Do we close there? I don't know. We'll see at 9 a.m. Eastern Standard Time today, and we will trade accordingly. But at current, we're at 9 a.m., and this bar were to close, the path of least resistance remains to the upside for the overall market. We'll leave off here with, I want to take a look at energy. I'm very interested in energy this week. I think that energy may, just may, be doing a catch-up with the rest of the market. So members, when we open up a trade today, if we open up a trade today, we'll be sending out alerts. And we're looking at energy. We're looking at the small caps in particular. And I'm trying to decide what I want to go here. Out of curiosity, I want to go with home heating oil. That was ripping not too long ago. I want to see if we resumed. Yeah. So here's a problem for the consumer, especially in the Northeast. And I don't want to drill down just yet. I will in a second. I know this is difficult to see. But look at this base here. Look at this W formation. I would be a futures buyer of home heating oil. I think that home heating oil is going to rip higher here. And this is why I have home heating oil. I had my tank filled. And I rarely do that, but I had it filled up in anticipation of a breakout. It was basically an arbitrage. I think I even mentioned that when the last time we spoke about home heating oil. It is consolidating nicely here. We have a W formation forming. Here's the pivot point. We pierced that pivot point back here on the 16th, back in September, not in October or November. In September, we're pulling back. Beautiful consolidation here, holding support. We're getting ready for a rip higher on the derivatives of oil, home heating oil. Watch the refiners. Watch. There's going to be so many plays. I'm going to go over this tonight with the refiners in particular. I don't know how they look, but we'll be looking at Valero, those names. I think that home heating oil is going to rip higher. Drilling down. Here's the W formation, a beautiful setup here on home heating oil. Let's check out light sweet crude. Sorry about that, folks. I hit the wrong button. And I'll wrap this up quick. I know everybody's got to get on with their day here. Okay, let's pull back. All right. So I know this is a little bit messy. But again, what we're seeing here is a very strong chart of oil. And remember last week we had a comment that was made about shorting oil, betting it would go down to 52. And I warned, don't do it. Be careful here. And I think I pulled back to this chart to illustrate. And sure enough, we're getting ready to break out here on oil. No breakout yet, but it is coming very soon. I mean, we're stair-stepping higher. We were in a downtrend. We broke out here, actually here, during the week of the 14th of October. Continuation move higher. We broke out again here, the week of the 14th of November. And we're just digesting gains, and we're about to rip higher here on oil, 4-hour chart. All right, so no reason to go rushing in this morning quite yet, but here was our sell-off rally. We bounced right back. We're holding gains. This support level is very powerful. And so what I'm doing here is I'm trying to identify a good risk-reward entry point for UWT. His fellow member Tom, he is looking at UWT. We discussed UWT. That's the leverage ETF putting you long of crude oil. We discussed that on Sunday night. We'll take a look at that. Last night on Market Wrap, we discussed the XLE, the energy sector, as well as DIG, which is a leveraged ETF. So we'll take a look at these names. No reason to go running in at the very open this morning at current. We'll do so on our terms, but we will be looking to get long of the gold mining, the energy names. I'm still not awake. Let's leave off with nat gas to round out our energy observations. Nat gas really not following through. Let's pull back to that weekly view again, see where we're at with nat gas. Nat gas is a little bit more difficult in that there's so much natural gas out there, and we're the biggest producer, no less. Let's clean this up. And it's not a bad chart. This week it's a bad chart, but we were overbought. We're stair-stepping higher. We're building a base. Now we're in a downtrend. We built a base. Now we're beginning to creep up, building a right side of a base. And the Federal Reserve won't want to admit this, but the observations I'm making right now about home heating oil, nat gas, these are all inflationary. They don't want to admit it. They'll call it transitory. They'll use the core CPI, which backs out food and energy. But I go to the supermarket, I see food prices going up, but they don't want to look at that. I see energy prices going up, but they don't want to look at that. So if you think that energy is going to influence the Federal Reserve, they tell you, they spell it out for you. They don't pay attention to it. It's not a part of their inflationary numbers. They're going to allow inflation to run rampant. And who uses energy? Everybody. The rich, the poor. So this is a tax hike, for the most part, on the poor, who these politicians pretend that they're out there trying to help. And forget about the middle class. we are in the lens of, or in the scope of the globalists, the politicians. They have no use for us. Either you're very, very rich or you're very, very poor in this new economy. So I digress there. Natural gas looking good. Down this week. Perhaps we'll bounce back. No new weekly low yet. So we'll see what happens at the end of the week. And with that, I'm going to sign off. Everybody if you haven't hit the like button, if I could ask you to do that, I'd really appreciate it. It helps me out with the YouTube algorithms. And with that, if you're just checking in, please look at the replay. And I will wish you a very happy Thanksgiving if you're checking out for the week. Enjoy the time with your family. And I will do swing trading today, tomorrow and Wednesday. I'll do them tomorrow and Wednesday. And hope to see you there. Everybody have a great day, a profitable trading day, and be well. Hey, Patrick, how you doing, brother? I'll see you later on. Hold on, I'm not going to end yet. I got your email. You scalped yesterday? That was the UGAS or the UGAZ? I think your email had UGAZ. He may have signed off. Okay. I'll see you later, Patrick. All right, folks. With that, everybody have a very profitable day. I'll talk to you soon. Be well.